Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here on this Monday, the 14th of September, 2020. Now, the Fed. I'm gonna say there's a 40% chance that I'm gonna be right about what I'm gonna say right now. I think the Fed might have stepped in on these markets. I'm gonna and just unannounced, just did it. They might have just did it. There's something a little bit fishy about it. The market started to fall off, just like I thought they would, and they fell off in the exact point that I said they would, and they fell for about 3 consecutive days there, and all of a sudden now the markets have turned back around again. I'm very suspicious about whether the Fed might not be behind this. This market, the market's turning back around now and going back up again. I'm very suspicious. What if they were behind it and they're just keeping it on the QT? They're not telling anybody what they're doing. They're just doing it. Supporting the markets, And you say, well, how could they support? Well, they could actually, they could be buying. I mean, they bought the junk bonds. Corporate bond market. They've been buying everything across the board. What's to stop them from buying stocks? And it's a much smaller market than the bond markets. It wouldn't require as much money to actually affect the outcome of where these stocks are going, especially if it was pointed in exactly the right spot at exactly the right time. It wouldn't take that much of the Fed's money to have the markets go back up again, because people are right on. I mean, all these Robinhood traders, they all want to buy the dip. And so the Fed can create the dip for them. In other words, when the market starts to get down to where the Fed doesn't like what's happening, they could inject a little bit of money, just a little bit, and the markets start to go back up, and the Robinhood traders all jump on it. And up she goes. In other words, it wouldn't take that much of a push, And could gold and silver investors, some of them, be in on and know what the Fed's doing, but they're not really saying? I'm just speculating here. I'm just wide open speculating about what just happened with the markets. But, and I really don't, I'm really not, absolutely not sure that I'm right or not. I'm only giving it a 40% chance that I'm right. But time will tell. And if they are doing that, they're going to get caught with their finger in the pie. And people will find out. If they're doing that and they continue to do it, it's going to be found out. It'll be found out. But I'm just wildly speculating right now about what happened. Anyway, let's get started. Let's open up the charts right here and take a look at this. We're looking at a rising silver price today. It's going up, it's bouncing down, it's going up higher, and it's bouncing down. But it's the steady trend is upwards, and it's in one of the little bounce downs right now, but it's still above $27. $27.16. It's at 46 cents on the day. Okay, for traders out there who watch silver really, really closely, these little bounces down, must scare them a little bit. But okay, the steady line is up, and it's going up really fast this morning. 27.16. Okay, now let's take a look at gold today. Gold is 19.58. It's doing basically the same thing. It's on a little trend down right now, but the overall trend is up today. Overall, and 1958.40. Now you remember, gold broke 2,000, and it held it for a considerable period of time above 2,000. So we're still below $2,000 on gold. Let's take a look now at cryptocurrencies. Cryptocurrencies been doing rather well today, too. You notice how crypto and gold and silver are all moving together now as an asset class? You get the up days on crypto, you get the up days on gold, you get the up days on gold, you get the up days on crypto. They're all moving together now. $351.5 billion for the industry. A Bitcoin dominance of 56.4%, which is a low Bitcoin dominance. Anything below 57 is low. Okay, and that means that they're buying in heavily into these altcoins. And that's bullish for crypto. $10,710 for Bitcoin today. So it's getting up toward the $11,000 mark again. We're looking at, I'm keeping my eye on that Polkadot coin. It was $4 and something there the other day. Now it's $5 and something, so where can you get those kind of gains in any other market, where can you get a movement that big in any of these other markets out there? This is an exciting market. There's a lot of energy in it. Okay, let's take a look at the Dow Jones Industrial Average. It's up 379 points on the day so far, or 1.37%. 28,044 today. And it's okay, let's take a look at it over the 1 month period here. And you can see that big dip. Big dip took it all the way down. It was at its lowest ebb here at 27,500. Its lowest ebb. And I'm suspicious that the Fed didn't come in and do something. Because we saw a fall off from 29,100. We saw a fall off all the way down to 27,500. Which is what? About a 1,600 point drop. So it dropped 1,600 points. And that's where I'm thinking to myself, hey, the Fed might have used the golden mouse. Just a little bit. Just not much. Just enough to get the Robin Hood traders back in there again and get smiles on their faces and get them all buying in there again, Just enough, Just enough of a push on that little golden mouse button. Okay, let's take a look now at... I don't know. I don't know that happened, but I'm suspicious of it. That's all. I have no evidence whatsoever that actually happened, but I'm suspicious of it. Okay, I can tell you one thing. If it did happen, and it went just the way I said it did, then if they continue to do that, they're going to get... It's going to get found out, that's what they're doing. Okay, crude oil, 37.17. It's just like a little kid. He might come in once and take one cookie out of the cookie jar, right? Not get caught. Nobody knows he ever did. Nobody missed that one cookie, right? But if he continues to come in there, the mother's going to come in. She's going to say, hey, the cookie jar's 3/4 empty. Johnny, what have you been doing? He'll get caught if that's what's happening. Anyway, okay, 37.17 for crude oil. Crude oil is suffering along, and the reason why is nobody's using as much. People aren't driving as much. It's just simple why crude oil's off. Demand is down. That's why. And U.S. oil production right now, they're down like 3.5 million barrels a day from what they were at their peak. They're tapping off these wells. They can't make any money. They need $40 a barrel. At least, just to cover production costs. So at $37, how can they pump it out of the ground and make any money? They're not money-making operations anymore, all these crude oil wells in the U.S. Now, if you go over to Saudi Arabia, where they can the oil comes flowing out of the ground practically, and it doesn't need to be, they don't have all these extenuating costs that the U.S. oil production has. See, they have to go in first to these U.S. wells, and they have to pump the oil off of the rocks and with high steam pressure and everything. It's called fracking. That's an extra added cost. Over in Saudi Arabia, the oil just comes guzzling up out of the ground. They don't have any of those extra costs. So they can put a barrel of oil on the market cheaper and still make money. And so they're still making money in Saudi Arabia on their oil. But the U.S. oil production is slumping because they're not making any money. Because it's fracking oil. It has a higher cost per barrel. Okay, bonds and rates today. And we're looking at the U.S. 10-year at 0.666. Isn't that interesting? Anyway, the U.S. 10-year's at 0.666. And we're looking at the U.S. 30-year at 1.41. Okay, so that's where we're at. And yields have been dropping on the long end, and real yields are rising on the middle end, and yields are dropping on the real short end too. So we got a mixed bag with treasuries today. Let's take a look at the U.S. dollar index. 92.99 on the U.S. dollar index. We're looking at a very slow decline in the dollar all day. Slow but steady. Slow but steady wins the race, guys. So just the dollar just keeps crouching down, 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 down. Slow but steady wins the race. It just keep creeping on down there. 92, 91, 90, 89. But it's being compared against the euro, and the euro's a piece of junk. So, I mean, if it's falling against the euro, I mean, that shows an awful lot of weakness there for the dollar. The fact that, I mean, they should compare the dollar to gold. Then this chart would look completely different, you know. Okay. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.